USAA Classic Checking is made to help you save with no monthly service fees and reimbursed ATM fees nationwide. Keep more of your money with USAA Classic Checking. USAA. Limitations apply to ATM reimbursements.
What is going on, YouTube? What is going on? I hope you guys are having an amazing Sunday. Let me make sure my audio is down, guys, real quick. Let me go ahead and adjust that. All right, you guys should be good, man. So super excited for today, guys. It is March 27th, 2022 at 9:47 p.m. For you guys that don't know me, my name is Antoine Boatwright. I'm out of the Columbia, South Carolina area. And I just want to give you guys insight. This is pretty much like a part 2 to my video I did where it's called Why Do We Even, or Where Do I Even Enter? So the biggest thing that I've heard people struggle with within foreign exchange, within mapping out cryptocurrency, guys, when they're trading, right, is where do I even enter, Antoine? Well, guys, we're going to talk about this in this short clip right now, so just bear with me. But guys, if we're going to figure out where we're going to enter, for me, I have to identify like what the higher time frame is doing, because I have to make sure I'm in the truer direction, right? So guys, if you look on the weekly time frame, we're in a bullish trend. We're in an uptrend. That means the market, or GBPJPY, that's the currency that we're involved with today. That's the British pound against the Japanese yen. It is extremely bullish, which means that a lot of buyers are in the market, guys, right? But in order for us to figure out where we're going to enter, we have to understand the 3 ways that the market moves, guys. It's very important that you understand this. I'm not sure if I covered this on the last video, but again, guys, right now we're in an uptrend, right? So we're in an uptrend. So if we're looking to continue, well, let's just focus on the 3 ways the market move, right, guys? Uptrend, sideways, you know, it'll be something crazy like this, or downtrend, guys, right? Sorry about my downtrend, but uptrend, or just up, guys, bullish, sideways, or as otherwise known as consolidation, or a downtrend, guys. Those are the only 3 ways that the market moves, right? So in order for us to establish, now since we're on an uptrend, let's focus more on that. In order for us to establish where we may be entering in the market, we need to figure out what point that the market may return if it's going to stay in that direction. Guys, what we're taught is that what you need to be able to do is find out the previous highs and lows of the market. If you're in an uptrend, if you're looking to enter in the market, guys, it has to be at a previous either level of resistance, which if you guys look, if the market broke out, this was the previous high. So now the market should return to one of these areas, right? The market in theory should return to one of these areas. But in order for us to figure out where the market may be overall, right? One, we want the market to come to us, guys. But we need to understand that the market moves or retests 38 to 50% of a previous movement, guys, right? 38 to 50%, right? So if you just look at, or if you just was like eyeballing it, right? You know what I'm saying? Because we're gonna get into Fibonacci later on, guys. But if you're just a new trader and you're like, well, I don't know where 38% or 58% is. This, your first point of contact, 9 times out of 10, if the market did return here, guys, this would most likely be your 38%, right? This would be your 38%. Let me make that a little bit bigger. No, I think that's good enough. This would be your 38%. This would be your 50%. And this would be either your 100 or 75%, guys, depending on, you know, what the market, what the overall movement is, right? So 100%, 38, 50, 75, or 100%, guys. These areas, if the trend is continuing in that direction, guys, what you should see is the market return to one of these 2. So it might go up a little bit more. It may return here, guys. That would be pretty much your first entry if you were looking at that. But again, that goes into like a little bit more of an advanced feature, guys, because the higher the trend, well, the stronger the trend, for me, the more shallow the pullback, right? But if it's like a medium sized like trend, or I wouldn't want to say medium size, but not that aggressive to the upside or not that aggressive to the downside, 9 times out of 10, price is probably going to want to collect that 50%. So even as a trader who doesn't know anything, guys, what's probably going to happen is price is going to come either 38 to 50%, right? Knowing that you're putting yourself ahead of the game, saying, okay, I know that at the very latest, or at the very least, that the market may return 38 or 50%. Those two, if I'm combining it with Fibonacci or just eyeballing it, right? Those two pretty much percentages are where I'm looking to continue the buy direction, knowing that a retest may happen, right? So let's completely clear this out, guys, and use what we just learned and identify it on GBP Japanese yen, right? So if you just start off, guys, based off of what we know about support and resistance, right? It was covered on my last video, so please go to that video if you're still struggling about support and resistance, and comment, guys, if you need further details, or like, Antoine, I don't know what's going on. I'll definitely make sure I put out another video, guys, but I feel like it's pretty self-explanatory. For me, I go through zones, right? I don't restrict myself to a level. I go through zones. So if I'm just looking at just on my page right now, guys, this would be my first level of support. I always color code it, so that way, I kind of know when I'm pushing it out to, my students, guys, they know that, hey man, while they're new, they know that this is pretty much my support. And then my top would be my resistance. This would be my buy zone. And then above, before the market broke out, this would have been my resistance. Now, I'm glad that the market did this, guys, because if you look at it, the market created a new level of resistance, or a new high. It broke out of this previous level of resistance. But that doesn't mean that its initial move should necessarily come here. You just have to figure that out along the way, guys. Now, when you're looking at it, if we're just eyeballing it, somewhere as far as like 38%, you probably would think that, all right, Antoine, where's 38% at? Without using Fibonacci, we're trying to keep this as basic as possible. Probably your 38%, guys, would be somewhere around here, right? Now, I'm looking on a weekly time frame. Obviously, when we're looking at retests or things like that, guys, when we're looking at entering the market, every different time frame, we're on a weekly right now, every different time frame has its own retest, or cycle it has to go through. So right now, I'm just illustrating this on the weekly, and then we'll break it down on the smaller time frame. So where's my 50? My 50 is probably somewhere over here. That's probably about 50%. And again, guys, I'm trying to do this without adding Fibonacci, because I know there's a lot of new guys out there trying to figure this stuff out. So this is probably your 50%. So if I'm sticking to the weekly time frame, 50% is probably where what a previous high was once at. This was a previous high. If you break it down to a line chart, this was once a previous high, guys, right? 38% is at a previous level of potential support. If not, it could be down here, but probably 38% is probably right around here, which we know the full movement of the market, because if we came all the way down, that would be 100% of this move right here, right? 100% of this uptrend move. If it decided to start selling, sellers came into the market, or it started deciding to fall down from here, we know that, okay, probably if it makes it all the way down here, it made an 100% move, which normally would probably have the market going opposite. It just depends, guys. But again, let's focus on what we have at hand. Off the top, right, already, when you're looking at it, 50% is at the previous high. So if we break it down on smaller time frames, we should use the same concept on each and every time frame that we're looking at, right, guys? So we're on a daily time frame right now. I no longer have that level of support that you guys saw on the weekly time frame. So what I'm gonna do is I'm just gonna change this for color purposes and make this my new level of support, because as far as the daily time frame, this is our most level of support. So if we're looking at it again, guys, let's make this our 100%, right? So if we're looking at it and we're looking to enter in this bullish market, which we clearly see that it's in an uptrend. How do we know that? Price has already broken a previous level of resistance where I have this red zone at, right? So now is it we want it to return either into this red zone and then continue there, or push a little bit down. Off the top, guys, this is 100%, right? Well, where's my 38%? Well, we can look at this as our 38%, knowing that if the momentum's high, it should respect this and continue in that direction. And then for my 50%, again, guys, previous high about, you know what I'm saying? So 50% would probably be somewhere in the ballpark around here. So let's go ahead and change that to 50%. So again, guys, with the momentum being high to the upside, especially if you guys follow Hakanashi candles, we already know that the market is overall bullish, right? We know that the market is pretty much, there are a lot of buyers in the market. So if we're looking to enter, it has to be at somewhere between a level of 38% or 50%. Are you guys understanding me? So anywhere in this area, if I'm looking for the trend to stay true, it should be in this general vicinity, guys. So normally at that point, if you look to your left and you just break it down, guys, because we're on a daily time frame, you'll see that, oh snap, Antoine, there is a previous high here at where I could potentially enter. Everything's a potential entry because the market could drive lower, the market can drive higher, guys. But if I also keep looking to the left where these highs are at, I see that there's support here as well, guys. Just because it broke through doesn't mean that this doesn't constitute a support. This is just a lower form of support. This is another form of support right here. So what if price in this general area, because again, if you zoned it up in this general area, what if price decided to say, hey man, I want to return right here? That would be potentially your entry, guys, if this market was continuing to the upside. But again, you know, this is just from a higher time frame. If we start breaking it down, we obviously want to find more information that's making us make sense of what is going on in the market. But as far as I see it, guys, now that we have the break, we know the direction of the market. So if I'm looking to enter, it has to be at a previous level for it to be bullish. It has to be at a previous level of support. That has to be at a previous level of resistance. If you look at it, guys, this is a lot of pips to cover. So if the market, if you get the indication that the market is starting to fall down from here, well, if you just drew this up and did your pip count, guys, wow, that's a 729 pip move. So if we have the potential to enter in this market already, guys, we can bring the sell down, not to mention we can buy back up. So guys, if you're looking to enter on this market, it's always going to be one at a previous level of support. If you're, you know, buying, if you're selling, it's always going to be at a previous level of resistance, where I do emphasize trusting that more than the previous high, until you can understand, or until you can figure out, okay, this market is trending down, this market is trending up. You're pretty much, you know, shooting from the hip at that point. But once you have those confirmations based off of that drawing that I just showed you guys, because again, we have to know the three ways that the market move, you pretty much put yourself at a better position than everybody else to make a better entry, put yourself at the least amount of drawdown. And it's definitely going to take patience, but you can you can pretty much have these entries waiting for you. Press the buy, sell button, whatever your direction, and then just coast from there, guys, man. So again, guys, man, I hope you found value on this tutorial for anybody that's struggling to enter, guys. Again, I'm gonna do more in-depth stuff. So I appreciate you guys' time. Please like, comment, subscribe, make sure you hit the notification bell, so that way whenever I release content, you guys can get access to that. And please share me your opinion, guys. I'm open to criticism. I'm open to things that you guys want to see more, like how do I do this? I've been struggling this as a trader. But again, guys, thank you again. My name is Antoine Boatwright. God bless. See you guys later.